Hello everyone, good day. I am making this video to help you understand the effects of business transactions, whether it is an increase, decrease, or no effect. I have already uploaded a video on analyzing business transactions, and for those of you who have not watched it yet, please feel free to watch it in your free time. I have included the link in the description box below, so feel free to watch it. So let's begin. In order for you to analyze the business transactions better, it is important to know these things: the normal balance of an account and where the increases are recorded. It would be much better if you memorize this or you know the rule by heart. Now let's recall, what are the three major types of accounts? We have assets, liabilities, and owner's equity. Now, let's talk about the normal balance first. Take note that in accounting, there are dual effects in every transaction. And when we say effects, there are two sides involved: the left side, or what we call as debit, and the right side, or what we call as credit. Now going back, assets. What is the normal balance of an asset? It is debit, left side. Liabilities. What is the normal balance of a liability? It is credit, or right side. Now, talking about owner's equity. Owner's equity involves four elements. We have owner's capital, withdrawals, income, and expenses. What is the normal balance of owner's capital? It is credit, or right side. What is the normal balance of withdrawals? It is debit, or left side. What about income? Its normal balance is credit, or right side. And expenses, its normal balance is debit, or left side. Now, let's go to where are we going to record the increases of these elements or accounts. So in this slide, if you notice, the sides where the increases are recorded, it's also the same as the normal balance. So as long as you memorize or know by heart which side is the normal balance of an account is, then you would know where to record the transaction to, whether if it's a debit or credit. So going back, asset. When you increase an asset, you record it in the debit side or left side. When you increase a liability, you record it in the credit side or right side. Same thing with the owner's equity. Owner's capital increase is in the credit. Withdrawals, when you increase it, you record it in the debit. Income, when you increase it, you record it in the credit. And for expenses, when it is increased, you record it in the debit side. Now let's have some concrete examples so that these things will make sense. So for example, received cash as additional investment. You have to take note that when you analyze business transactions, you have to remember or you have to assume that you are the accountant of the company or you are the company itself. So imagine when you received cash as an additional investment, what are the elements of major accounts that are affected? Or what accounts are affected? Because take note, going back to the previous discussion that I have mentioned in the previous video, every transaction has dual effects. There are probably two accounts involved or more than two accounts involved. There's a dual effect. There is a debit and there is a credit. So let's analyze. So let's assume that your cash on hand is 10,000. And then there was an additional investment of 5,000. Therefore, what happened to your cash? So from 10,000 plus 5,000, it became 15,000. So what happened? Obviously, is it an increase or a decrease? It is increase. Now to analyze that, your cash increased. Now cash is what element of major account? So cash is an element of asset. Therefore, your asset also increased. So that's the first element that is affected, or first account that is affected. Now, what is the second one? Remember, additional investment or investment, that is capital. So let's assume that the capital is 3,000. That's the original balance. When the additional investment was made, which is 5,000, what happened to the capital? It became 8,000. Therefore, obviously, the capital is increased. Now, what element of the major accounts is capital? So capital is an element of owner's equity. Therefore, when your capital is increased, your owner's equity is also increased. Now going back to the accounting equation, we have assets, liabilities, and owner's equity. Now what happened to the liabilities? Is the liability affected? The answer is no, it's not affected. Now another example, purchased supplies on account. So to understand this, let's have an example. So imagine that you are selling, or you have a sari-sari store and your supplier is SM. And let's assume also that SM will deliver the goods to your store every Friday. And let's talk about one of the products that you are selling in your sari-sari store is shampoo. And let's put it this way. You only have 3 shampoos or 3 sachets of shampoos, 3 sachets of shampoo left. And you purchased additional 10 sachets. So what happened to your supplies? Obviously, it becomes 13, or it simply increased. Now, when your supplies is increased, or when your supplies are increased, which element or which major account is supplies associated to? It is an element of asset. Therefore, when your supplies is increased, your asset is also increased. Now, that's the first account that's affected. Now, what's the second account? Or do you remember the value received and value parted with? I have discussed it in my previous video. So your value received here is the supplies. And what about your value parted with? What did you give? Did you pay SM? Did you give out cash? The answer is no. Going back, purchase supplies on account. When we say on account, that means the transaction was on credit. In layman's term, utang. Therefore, you have an accounts payable. So let's put it this way. Before this transaction, let's imagine that you already have an accounts payable balance of 20 pesos. And then you bought 10 sachets of shampoo and each sachet costs 4 pesos. So therefore, that's a total of 40 pesos. Now from your balance, original balance of 20 pesos and your additional 40 pesos, so what's the balance of your accounts payable now? So it becomes 60 pesos. Therefore, what happened to your accounts payable? Your accounts payable is increased. Now, to which major account accounts payable belongs to? It belongs to liability. Therefore, when you increase your accounts payable, your liability is also increased. Now, let's have a quick recap. Going back, in this slide, when you increase your liability, where are you going to write it? Is it in the debit or in the credit? So it is recorded in the credit side. All right, so another example. Charged customers for services made on account. I have also discussed this in my previous video that it is important for you to understand the nature of the business first before you record the transactions. Now, what are the 3 types of business that exists in our society? So, just to recap, we have manufacturing business, we have merchandising business, and we also have service business. So, in this transaction, by just reading this, what do you think is the nature of the business of the company? Obviously, this is a service. So this is for a service type of business. Only this transaction. Now, let's analyze what accounts are affected. So when you charged customers for services, so that simply means you have performed your service to your customers. To understand this better, let us say you have a salon business and you cut the hair of your customer. Therefore, you have already performed your service. Now, when you performed your service, what do you expect to get from your customer? Supposedly, your customer will pay you through cash. But in this transaction, did your customer pay you cash? The answer is no. Take note of the word on account. So this means that you have a collectible amount from your customer, or simply your customer has to pay you an amount. So let's imagine, or let's put it this way. Before this transaction, imagine that you don't have any accounts receivable yet. When you rendered your service to your customer, let us say it's worth 4,000 pesos. So what happened to your accounts receivable? From 0, it became 4,000. So obviously, your accounts receivable increased. Now, what major account does accounts receivable belongs to? It belongs to asset. Now, when your accounts receivable is increased, therefore, your asset is also increased. Now, going back, it's a dual transaction. When you performed your service to your customer, you did not receive cash, but your value received is accounts receivable. What is your value parted with? So of course, you have performed your service, and that formed part of your service income. So let's put it this way also. Let us say your balance for your service income is 1,000 pesos. After you have rendered the service, so you now have a collectible amount of 4,000 pesos. So you have a service income of 4,000 pesos. So what's the balance of your service income now? So this is actually 5,000. So 4,000 plus 1,000, that's 5,000. Okay, there's an error here. So let's analyze the effects of transactions then. So your service income increased, and which element or which major account does service income belongs to? It belongs to owner's equity. Therefore, when service income is increased, your owner's equity is also increased. So the two accounts involved in this transaction are accounts receivable, that's your debit or in the left side, and service income, that's your credit or in the recorded in the right side. Now, let's have another example. Paid cash for rent on building. So, let's put it this way. When you rent a building, then of course, you have to pay for the rent. So obviously, how are you going to pay it? You're going to pay it with cash. So that's your value parted with. That's your credit. But what about what did you receive? Of course, you have occupied the building, and that formed part of your rent expense. So let's put it this way. Your rent expense balance is 0. But after incurring the rent expense for the month, let us say for the month of November, and the monthly rent is 1,000 pesos. So from 0, and then you had a 1,000 rent expense, so your balance becomes 1,000. Therefore, what happened to your rent expense? So your rent expense is increased. Now, what major account is rent expense or does rent expense belongs to? So it belongs to owner's equity. Now, when you incur an expense, what happens to your owner's equity? Your owner's equity is decreased. Always remember that an expense is a decrease in owner's equity. I also would like to add, when we talk of income, of course, it's an increase in owner's equity. But expense, it's a decrease in owner's equity. Now, what is the second account that is affected? So of course, it is cash. So when you paid your rent expense, you have shelled out cash. So imagine that you have a cash balance of 15,000. Because going back in the first transaction for the additional investment, so you have now a cash balance of 15,000. When you pay the rent of 1,000, so it's deducted. Therefore, what happened to your balance? It becomes 14,000. So your cash is decreased. Now, when your cash is decreased, what happened to your asset? Since cash belongs to asset, your asset is also decreased. Another transaction, collected on account receivable in full. So this is related to the previous transaction when you have rendered your service and your customer hasn't paid you any cash yet. So you have an accounts receivable. So let us say you have collected the full amount of the accounts receivable. So in analyzing that, value received and value parted with, so what did you receive? You received cash of 4,000 pesos. Now going back, you already have a balance of 14,000 pesos because remember you paid the rent expense for 1,000. So you already have a balance of 14,000. And then you received a payment of 4,000 from your customer. So what happened to your cash balance? It becomes 18,000. Therefore, okay. And then going back to the previous or the original transaction, take note, when you recorded your performance of service, you received accounts receivable and that service income for the credit or for the value parted with. So since you receive the payment now in this transaction, therefore your value received is cash and your value parted with is of course your accounts receivable of 4,000. So from the original balance of accounts receivable, which is 4,000, and then you have already given that out, your value parted with, therefore it's 0. So what happened? So your cash increased and your accounts receivable decreased. Take note that cash and accounts receivable belongs to the same major account, which is asset. So positive and negative, that results to no effect. Another transaction, returned supplies purchased on account. Take note, you in the previous example that you received 10 sachets of shampoo from SM. So the original entry for that, for your value received or your debit, is supplies. And for your value parted with or your credit is accounts payable. So supplies is an asset and accounts payable is a liability. Now, going back, your balance for your accounts payable is 40 pesos. You returned, let's imagine you returned 2 sachets and each sachet cost 4 pesos. So that's a total of 8 pesos. So 40 minus 8 is equal to 32 pesos. So what happens to your accounts payable? Therefore, your accounts payable is decreased. So what happened to your liability? It is also decreased. Now going back, just to check, when you decrease the liability, which side are you going to record the amount? Is it in the debit side or in the credit side? I hope you are right. It's in the debit side. Okay, let's continue. So the other transaction or the other account that is affected is your supplies. So from the original supplies that you had, like 3 and then plus 10, you got 13. Or let's compute the value. So that's 13 times 4 pages. So that's a total of 52 pages. So you return 2. 2 times 4 is equal to 8. So for the balance, how many sachets do you have? So 13 minus 2, that's 11. 11 times 4, that's 44 pages. So what happened to your supplies then? So your supplies is decreased. And what happened to the asset? It is also decreased. Just to check, when you decrease the asset, where are you going to record the amount? Is it in the debit or in the credit? Okay, so I hope you are right. It is recorded in the credit side. Now another transaction, paid cash to settle accounts. So this has something to do with your when you purchased something and then you did not pay cash. So for the original entry, so yeah, this is for the supplies. For the original entry, for the value received, originally you received the supplies. And for the value parted with, which is your credit, that's your accounts payable. Now, what are affected when you paid your cash, or I'm sorry, when you paid cash to settle your payable, your settle accounts? So going back, supposedly you had 40 pages debt, but you returned 2 sachets of shampoo. Probably it's defective, that's why you returned it. So that's 40 pages minus 8 pages, so that's 32 pages. So when it is paid, what happened to your accounts payable? It becomes 0. So therefore, your accounts payable is decreased, as well as your liability. It's also decreased. So what's the other transaction, or what's the other account that's affected when you paid cash aside from accounts payable? It is your cash, of course. So from the cash balance of 18,000 and you paid your accounts payable of 32 pages, you now have a balance of 17,968 pages. Obviously, your cash decreased. Also, your asset is decreased. Now, lastly, paid cash to owner for personal use. So, it means that the owner withdrew money from the account or from the business. So let us say the owner has not made any withdrawals yet. So that's 0. And then let's imagine that today the owner withdrew 2,000 pages. So from the 0 balance of withdrawal, and then he withdrew today, it became 2,000 pages. So obviously the withdrawal is increased. Now take note, when you record transactions, let us say for withdrawal, it's the same thing with capital. It's the last name of the owner of the business. So in this case, just an example, the last name is Siniza and then comma drawing. So the drawing the drawing account is increased. Drawing is an element of owner's equity. However, just like expense, drawing decreases owner's equity. Again, drawing decreases owner's equity. So if your drawing account is increased, your owner's equity account is decreased. So aside from withdrawal, the second account that is affected or your value parted with is, of course, cash. So from the previous balance of 17,968 pesos, and then you withdraw or you deduct 2,000 pesos out from it, the balance is 15,968. Obviously, what happened to your cash? Your cash is decreased and your asset is decreased. So I really hope that this video helped you understand better the effects of business transactions, whether it is an increase or decrease. And I would like to emphasize that it is best to memorize the normal balance of each account. Like, which side are you going to record the amount when you increase an account, whether it's in the debit or it's in the credit side. Because take note that normal balance side is the same with the increase, or it's the same with where you are going to record the increase of that transaction.